Hey fellow investors and fellow stock guardians, it's Thursday, February 18th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from a red stock market. The stock market indices finished the day in the red unanimously. The red results are courtesy of an unexpected rise in the number of new jobless claims. We all thought the economy is back on track. However, the rise in the number of new jobless claims is a good reminder that the COVID-19's impact on the economy is still quite prevailing, and it takes time for the economy to recover fully. By the way, before we jump into the stories of the day, the GME Short Squeeze drama reached a new critical milestone. The executives from Robinhood, Melvin Capital, Citadel, and Reddit appeared in front of the House Committee on Financial Services to talk about and answer questions related to the Short Squeeze drama. Moreover, you may have seen a Redditor and a YouTuber known as Roaring Kitty who also appeared today in the House of Representatives. He's known as a longtime GME bull who ended up making millions of dollars from his GME option trading. This guy was once known as the leader of the Redditors pack with a so-called diamond hand holding on their GME shares and options. Further investigations showed that he's no ordinary retail investor, but rather a registered broker. As of now, we don't have any reason to believe Roaring Kitty has done anything wrong. We hold off from making any judgment until all the legal proceedings are complete. However, his testimony in House of Representatives today made me laugh. At the start of the testimony, he mentioned that he is not a cat, which is really an interesting joke in such a serious situation. Here's what he said.
Thank you, Chairwoman Waters, Ranking Member McHenry, members of the committee. I'm happy to discuss with the committee my purchases of GameStop shares and my discussions of their fair value on social media. It is true that my investment in that company multiplied in value many times. For that, I feel enormously fortunate. I also believe the current price of the shares demonstrates that I've been right about the company. A few things I am not. I am not a cat. I am not an institutional investor, nor am I a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis.
Beside that little joke, as a retail investor, it's quite interesting to follow the progress of the GME drama. I personally hope the hearings end up giving retail investors more power and support to continue on their financial success and prosperity. I'll keep you posted as the story unfolds. Today, I looked at the popular tab to pick a few winners' stocks, and none of the most popular winners were the companies I know of. This means most likely there are a lot of penny stocks and over-the-counter stocks that move drastically today. I go ahead and use the penny stock and OTC toggle on a StockGuard's page to remove them from the list of winners, and then some known names popped up. Among winners, shares of Wix.com were up by more than 14%. This company is a new platform that enables anyone to make beautiful websites without knowing how to code, and it had an excellent 2020. No surprise there. People sitting at home, companies needing online e-commerce operations, and Wix was there to help them out. Watch this stock on your watch list if you want to add some growth to your portfolio. I don't think the story of growth for Wix.com is over just because the pandemic is over. Cheesecake Factory was also up more than 8% despite a horrific 2020. Analysts are now upgrading the stock to buy with higher price targets, counting on the reopening impact in 2021. No surprise there either. On the loser side, and from the list of stocks on my radar, two stocks grabbed my attention. The first one is Fastly. I have bought and sold this stock a few times during 2020 as the company's stock price fluctuated heavily. Fastly allows developers to deliver online content rapidly and securely. If you ever heard of the term edge computing and edge security, is exactly what Fastly does. Revenue in 2020 was up by 45%. The quarterly earnings report was quite strong, but shares dropped more than 14%. Why? I listened to the analyst call and went through the shareholder letter that was published with the quarterly earnings report. It seems investors are disappointed about the outlook management shared for the next quarter, especially for a lower than expected gross margin and profit margin. It seems the growth is coming at a higher cost and Fastly needs to invest further in its product in order to maintain its growth. To me, that's quite understandable. As you know, at StockCard, we do the same. We sacrifice our profitability to invest in our product for the long-term success. Therefore, Fastly goes back to my watch list with a high possibility of picking up some shares to take advantage of the price drop. The second loser stock of the day is Walmart. The company surely surprised investors by missing the expectations, and the stock price dropped more than 6%, which is quite rare for a company with more than $400 billion in market capitalization. Going through the quarterly earnings report revealed an unprofitable quarterly forecast with negative earnings per share due to more than $1 billion in COVID-19 expenses. The gloomy outlook got a lot of investors off guard. Looking back at the last quarter, while the comparable transactions were down across the board, the company managed to grow comparable sales and e-commerce sales and even increase average transaction value almost across all markets. I really doubt there is anything fundamentally wrong with Walmart. It's a stable, dividend-paying stock with cash and profit, which has done an astounding job in staying competitive with the likes of Amazon, investing in e-commerce, automation, and infrastructure required to take the company to the next decade. It also has a global footprint in Canada, China, and the UK, among other markets. On a StockCard website, go to Walmart's StockCard, click on Our Strategy button, and see the company's dividend fitness status. You can see its stability and consistency, and for those reasons, I'll be adding this stock to StockCard's Dividend Seeker portfolio today. As always, if you'd like to give a StockCard VIP a try to research as many stocks that you want and follow successful investor portfolios, use promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. See you tomorrow.